Okay, so let's start. We are going to have a discussion on regulation and legal aspects of health insurance. And in this session, we should be able to know why regulation is very important in the health insurance industry. What are the risks that can happen when we don't regulate the health insurance sector? And then what are those structures that are in place to regulate health insurance? And then we also look at the different roles played by the government agencies and also what we call industry self-regulation in health insurance. And then we'll look at the processes involved in licensing health insurance providers. So those are the objectives of this session. Health insurance regulation is very important because it lays out the plan, the plans, the guidelines, the policies that are supposed to be followed in running the operations of health insurance companies. So every country or region have different entities, agencies, or commissions that regulate health insurance. Okay, these agencies have one major role, which is basically to protect the interests and rights of the policyholders, the providers, and then the general public at large. But the essence is that healthcare should be accessible, affordable, and of quality. So there should be value for money. If you are insured, you should be able to get these services that are of quality, also accessible and affordable. So the regulations should be in place, or the regulations are in place in order to protect the public, the consumers of, or the customers of insurance organizations, or what we call the policy holders. Okay, the policy holders should be protected from unfair practices by the insurance companies. Okay, because there will be tendency to commit fraud in insurance industry. Cases of where claims are not paid, instances of underreporting, the risks associated during application for insurance. So there are many practices that can result into fraud in the health insurance sector. So it is very important to protect the customers from unfair practices. And then the other thing is, like I said, there should be quality. I mean, value for money. If you pay premium, monthly premium, you expect to get the best quality of care possible. Okay, so there should be value for money for the payment that you actually made. So you should be able to access quality services. And then you want to make sure, if you're the regulator, you want to make sure that there is fair competition. And fair competition brings about improvement in the operations of insurance organizations. It brings about innovation. It improves overall quality. Okay, and people should have multiple choices for them to make decisions on which organization or company they can get health insurance policies from. Okay, so you don't want to have big insurance organizations or companies taking up the small insurance companies. Okay, you don't want that to happen. We call that market consolidation. You don't want people soaking up. You don't want a big insurance company to soak up the competition from small companies, and this limits the options that are available to the public. So the policyholders are the individuals who have gone to these insurance companies and then have procured an insurance policy or insurance plan. So we call them policyholders. These people have rights, and we are going to look at this. One is that they have the right to receive clear and accurate information about their policy. Okay, so if I want to insure myself for a particular, using a particular health insurance product, I should know the details that are contained in that product. Okay, I should know how much, of course, I need to know the premium. I need to know the services that will be included in that product. Okay, what do we have antenatal? Do we have dental? Do we have eye care? Do we have OPD? Do you have emergency? Do you have inpatient? Do you have pharmacy charges? I need to know all the details. So the benefits, I need to know them. And then the exclusions, which diseases will not be catered for in this insurance plan. Okay, so I need to know that. And then they have the right to request for changes in their policy terms. Okay, this means that if they are not comfortable with some of the terms of the health insurance plan, then they can request for changes to be made, and perhaps this will also mean that the premium may also have to be adjusted. They can also cancel their policy, okay, within the free look period of 15 days. Okay, so when they get this insurance policy, they can have that period where they can review and reread the policy over and over again, such that they really understand it. And then afterwards, if they think they can cancel the policy, they have that right to cancel that policy and get a refund. And if the insurance company is making changes to the policy, then they should communicate to the policy holders in time. Okay, this is very important that that happens. And if they are not satisfied with the services of the insurance company, they can lodge a complaint through either the association of insurance companies or through the insurance regulatory body that is owned by the government. It is there. Okay, or they can lodge the complaint directly to the insurance company if they are not satisfied. What are the responsibilities of these policyholders? One is that they must pay the premium on time and keep their policy in force. If you don't pay, then it means you ask actually that policy may be null and void, because it cannot be implemented if you're not paying. You need to read the policy document clearly or carefully, and if you have any questions, you should be able to raise them and get the necessary answers. Okay. If, for example, you move from one place to another, or you change your phone contacts or emails, it is your responsibility to update the insurance company with this information. Okay, it is very important that accurate information is kept about you by the insurance company. It is also very important, especially in the process of applying for insurance, for you to disclose factual information. Okay, don't withhold information about your health, your occupation, your income, lifestyle, and the rest, because it is this information that will be used in determining the premium that you will be paying. Okay, so it is very important that you really understand this. Provide accurate information such that the premium can be determined accurately. And then in case there is any issue of fraud, abuse, or anything, authorities can be involved in investigating or verifying information that you have really provided. And you are expected to cooperate with these authorities in case there is any investigation that is ongoing. Regulating health insurance is quite difficult. It is complex because of many reasons. Of course, one, you have many stakeholders involved. And these stakeholders have different preferences and needs. If you are the regulator, your intention is to make sure that you have the business side of the company, or you want the companies to remain in business. Okay, and then on the other side, you want also the policy holders to have access to quality services. Okay, so if they are making a claim, that claim should be processed. Okay, so you have these conflicting preferences or needs amongst the different stakeholders. So to balance that can be quite hard. And then the other thing is that in the healthcare industry, we have a lot of things that are changing at a very rapid speed. Okay, so you have new technologies coming in, new methods of treatment of diseases. You also have emerging diseases, re-emerging diseases. You have a lot of things that are really happening at the same time, and this will actually affect the need for health insurance. Okay, and also it actually disrupts the market. It causes a disruption in the market. I mean, the other issues that are also very important are issues to do with the equity, that you want everyone to access insurance services. But unfortunately, we live in a world where we have people of varying income levels, and those of lower income levels may not be in position to access insurance services. So equity becomes a difficult issue. And then another thing is efficiency. The resources that you use, the resources or the inputs in running health insurance may not directly translate into having better health outcomes. So that is an issue to do with efficiency. Okay, issues to do with using a lot of resources with the minimal output, issues to do with operations, okay, in processing payments, issues like that fall under efficiency. And then you have what you call sustainability in health financing and delivery. Okay, so with sustainability, you want a model that can be able to sustain itself. It should be self-sustaining. Okay, it should be a model that is self-sustaining. For example, if you have an insurance, health insurance plan that relies on donations, that may not be sustaining. It may not sustain itself. So if you're going to run a health insurance business, you will be faced with a number of risks. And these risks can result into losses. And therefore, if you're going to run this health insurance business, you need to have measures in place to make sure that these losses don't happen. So one is you will have what you call underwriting risk. When a person is applying for insurance, they give you all the information about their health. You also verify that information with using their medical records. You also cross-check the procedures that they have undertaken, what medications they are on. Do they have any pre-existing medical condition? So you use all this information to determine how much they will have to pay. That is what you call underwriting. Now, if you do not do these processes very well, you run a risk of getting losses, because for people who perhaps, for example, have an underlying condition, and then you don't notice that, and then you tabulate a lower premium, and then it means that this person who is having a chronic illness will always come for a claim for the medical bills that they are incurring. The other thing, the other risk is operational risk, which is that there are losses. These are losses that are due to inadequate or failed processes, systems, human factors, or external events. Okay, so when you're running a health insurance business, for example, in South Sudan, you have a number of things that may really create losses to you. And these can actually be external factors. For example, the exchange rate. Okay, you actually don't have control over the exchange rate. And in your tabulation, you may need to be very keen on whether you need to use the South Sudanese pounds or the dollar, the US dollar. And then you also have issues to do with human errors that can happen either during the application and processing of claims. Okay, if you're using computerized systems, these systems may actually fail. You may have a data breach where you have risks associated with fraud and data manipulation. So those are operational risks. And then you have financial risks. One is changing interest rates. These are basically macroeconomic factors, like things that are happening within the economy of a given country that can affect the health insurance sector. Okay, so in our case, getting a bank loan may be hard. If you happen to get it, the interest rate may be high. And then also the foreign exchange rates are high. And then you have inflation. Okay, these are all risks that you really have to face. And then the fourth one is what you call a strategic risk, the probability or possibility of losses due to changes in business environment, customer preferences, competition, or regulation. Okay, you wake up one day and then they say all insurance companies should register again. Okay, so that is a regulatory issue, and that this registration may come with new terms and conditions, and that may be extremely very hard. Or if you're a small insurance organization, all of a sudden you have a big insurance organization coming into play as a competitor, and it has a big resource envelope, and it will overshadow you, and perhaps it will provide a lower premium, and then you face problems. Okay, so you also have customer behavior changing, and this may also affect the health insurance sector. So therefore, regulation is very important. Why? Because we have seen that this business is actually risky. It is very complex. You have multiple stakeholders. So it has to be tightly regulated. The regulatory structures can be categorized into three: government agencies, industry associations, and self-regulation. So government agencies, this is where I've tried to do research and find out which government regulatory agency or commission or authority is responsible for insurance in South Sudan. That I've not yet gotten the answer. I've tried to contact people who are directly engaged in health, in insurance in the country. I'm yet to get an answer. But the different resources that I've found is that the resources focus on the National Social Insurance Fund, which is under the Ministry of Labor. That's an area that that's a resource that I've found. I've also found a resource on an individual who was directed by the government to spearhead the creation of a commission that will regulate insurance in South Sudan. And that interview was conducted by a Kenyan newspaper. And that newspaper was updated in 2020. That newspaper article was updated in 2020, but still it was not clear. That article was not clear on whether a commission was finally formed. Okay, so at the moment, it appears there is no National Insurance Authority of South Sudan. So I'm actually creating the name itself. But that does not mean that the insurance organizations in the country are not regulated. There are other agencies that regulate businesses generally that we shall look at. So different countries have different agencies responsible for regulating health insurance or even insurance in general. Okay, so these commissions usually are headed by people that are appointed by the government, and they serve on fixed terms, and their tenure can be renewed based on performance. Okay, so because of the fact that they are these government agencies, it means that they have the resources to be able to implement these regulations and guidelines to see that they're actually well enforced. In some countries, you have what you call industry associations. So, for example, you can say that all the insurance organizations in South Sudan have an association. Okay, and then that association takes it upon itself to make sure that they do business following the guidelines that have been set by the government. So the key players in the industry work together with the government agencies and to regulate themselves. Okay, so this can actually be a concept of what we call self-regulatory bodies, but also individual insurance companies can take it upon themselves to commit to adhering to the industry standards and practices. You see, this is an issue where even if there is no one watching over you, you say, I'll always do the right thing. That is what we call self-regulation. So companies actually commit to make sure that they will always do the right thing, regardless of whether there is someone watching or not. That is what we call self-regulation. But generally, the regulations in the health insurance sector look at the businesses that are setting out to engage in insurance. Do they have the resources to do that? So they look at financial soundness and solvency. And then they look at what do they do and how do they do it? That is practices and conduct. And then you also have looking at protecting the consumers. Do the consumers know their rights and obligations, and are those rights actually respected by the insurance companies? And then social regulation, which is that the provision of health insurance has what we call social objectives and obligations. Are these insurance companies looking at this? Are they providing affordable insurance cover? And are they emphasizing universal coverage? How are their packages, and what is the quality of care that they provide? So licensing and registration is part of the regulatory framework for the health insurance sector. So it means that if you are going to open up a business that is going to offer health insurance or insurance in general, you need to follow the legal requirements in order for you to operate. So you need to get registered, you need to get the official permission, and then get registered by the body, okay, of that state or of that country. And then of course, the requirements for registrations differ depending on the scope of the services that you're going to provide, and also depending on the country and territory. In this slide, you can see that we also talk about the intermediaries who are basically they may not be providing insurance services directly to the people, but they may be involved in marketing or in connecting consumers to insurers. So it is very important that also intermediaries are also registered and licensed to practice. So we look at the minimum capital. How much do you need to have in order to start a health insurance business? So if you look at your assets and liabilities, what do you have? Okay, that is basically the solvency that we are looking at, the ability of an insurer to meet its financial obligations and pay claims to policyholders. Okay, so we need also to have what we call governance structures. With governance structures, we are basically referring to just here. Do you have a board of directors, senior management committee, internal audit, risk management, and then compliance functions? You need to look at all this and see that you have them. You need to make sure that data or information that you collect from your policyholders can easily be shared with the regulatory authorities. Transparency is very, very important. So you need to provide accurate, timely, and comprehensive information when needed to the authorities. Okay, so it's very, very important that that minimum amount of money that you should have in order to start the business of health insurance should be there. And it is based on what you call risk-based capital. So we have what you call seeded reinsurance. If, for example, you run an insurance organization, but you don't have enough capital to run these operations quite effectively, you may decide to reinsure how can I term that? You get someone comes and gets insurance from you, but you transfer that that person to another insurance company, such that when a claim is made, it is the other insurance company that pays this claim and not you. That is what we call ceded reinsurance. And then we have what we call compulsory insurance lines. These are very important types of insurance that are mandated by law, or by the government wants you to be able to provide these insurance types. For example, motor third-party insurance. These are very important, and the government makes sure that you actually provide them. Okay. So reinforcement, it is very important that it's very important that the regulations that have been put in place can be reinforced. And there are three categories of regulatory measures that can be taken to make sure that these regulations are put into place. Sanctions, penalties, and remedies can actually be made. So let's look at each of these and see what they really contain. If you breach laws or the regulations, you can be fined. So you pay some amount of money, or your license can be revoked or suspended, or you can get orders that tell you to stop offering insurance services or particular insurance products. Or you can be taken to courts of law and be prosecuted and charged or even imprisoned. You can get penalties, okay, such as, for example, there can be what you call the restitution, where policyholders have suffered financial losses due to regulatory violations. Insurance companies are required to compensate them for the losses that they have made. Or if you make disengagement, is when you make profits from insurance practices that are not allowed. All those profits can be withdrawn. Okay, and then forfeiture is when you this is when the penalty involves you losing assets, funds, or property that you have actually acquired through illegal means. Okay, so there are many penalties that you can actually face. You can be taken into courts of law, and an injunction can be issued. You can still, the court can issue what we call a declaratory judgment, which clears fines on the rights and obligations of the parties involved in health insurance. So the courts of law actually play an important role in either cancelling the insurance policy or in either adjusting the terms and conditions in the different policies. So you need to make sure that to have effective regulation, you need to be collecting information from the insurance organizations, interpret this information, and detect any issues that can be happening amongst the different stakeholders, the insurers, the policyholders, and the others. Okay, this information that you collect from the different stakeholders can enable you to detect any issues that are actually happening within the industry. Another thing is what we call mis-selling, which is where insurance organizations can be selling insurance policies without following the ethical principles. Okay, they basically, they could be withholding certain information and then sell these services to the consumers and then make profits out of it. Okay, so that is mis-selling. It is very important that transparency is actually enforced. Okay, people should provide the accurate information to consumers such that consumers buy what they actually know. Okay, so we have challenges in regulation, especially for people who are living in the rural areas and also informal sector workers. Okay, you as a regulator, you want to have these people on board, but sometimes it is actually not easy to have them. Okay, so you need to make sure that your services are or insurance services are affordable and they are tailored to the needs of these people. Use the relevant existing community networks and technologies and things like that. Make partnerships. These are very, very important in making sure that you capture this group of people. And then you have an issue to do with pre-existing conditions, where if someone comes to apply for an insurance when they have a condition already. So it is very important to take note of this, because this will affect the premium that will be calculated. And then we have an issue to do with renewing health insurance, which is very important. It allows continuity of coverage and protection against unforeseen medical expenses. It is very easy to accumulate in the no claim bonus, portability, and the also enhancement of some insured and addition of new features to benefits to the existing policy. Okay, so I think we'll end there. If you have any questions, please, you can ask.